you are a younger person right now, you're watching this, understand the long-term benefits of home ownership. Nobody's trying to sit up here and scam you and just tell you to buy a house. We're trying to look to set you up for your whole entire future. Hello and welcome to the Prepare to Compete podcast, where we talk all things VA benefits, real estate, entrepreneurship, and more. Kenneth Davis, how you feeling today,
man? I'm well, blessed. Happy new year, right? 2024, able to execute and be able to serve this new year.
Absolutely. Prepare to compete. We made it to 2024, man. And, it's beautiful to be here. We have so many wonderful ideas and things we want to do this year. Thank everyone for all of their support with supporting the channel. Please continue to, again, like, subscribe, comment, all those things, and really continue to support us. Matter of fact, reach down in the comments right now. Let us know where you're watching from, and let us know what type of topics you might be interested in hearing. It definitely costs you nothing, but it means everything to us.
Yes, sir. Yes, sir. Again, continuously having the support to be able to give more information, faster rates, and more accurate to your particular situations in regards to disability benefits, real estate, and entrepreneurship. So again, please continue to like, subscribe, and comment on anything that you want to be able to, any topics that you may want to cover, because at the end of the day, it's all about you guys, and that's what we want to do, is support you.
Absolutely, absolutely. So, today what I want to talk about for this Real Estate Sunday School edition is we want to get into talking about real estate and just kind of doing like an overall market update, being that we're here in 2024. And I know so many people have resolutions of actually purchasing a home here this year, and whether it's primary residence or even kind of investing in real estate. So definitely want to make sure everyone's informed with that.
That's great. That's great, because I'm again, as much as we're dived in as veterans and trying to understand the navigation of the real estate market. Unfortunately, it's a lot of variables out there right now. So we can't wait till you clear it up.
Absolutely, absolutely. So, one of the big things that's kind of in the news right now is the Federal Reserve and actually doing some interest rate cuts, right? There's been so many interest rate hikes in 2023 and, went up almost to 8% at one point in time. And now we're starting to see that, I guess, raising interest rates didn't really help inflation the way they might have thought, right? So they're going to be lowering that. And what I want to do is really provide some education for you guys as well, because the way that they're actually doing the interest rates right now, as far as how the Federal Reserve have been handling things, is not really that typical, right? So we definitely kind of want to talk about that and kind of unpack everything that what's going on with the interest rates and kind of what to really expect moving forward in 2024, and if that's going to really be a good time to buy for you.
Yeah, I mean, because I'm listening again. We speak to a lot of veterans, right? What is one of the number one, I guess, deferring issues that most veterans, why they don't want to buy? Well, interest rates.
Interest rates, yeah.
Interest rates, right? So, yeah, it's going to be very interesting. So, can't wait.
Yeah, absolutely. Gets into the affordability and them actually being able to afford a home. So, what the Federal Reserve is looking to do right now is they're planning for 3 rate decreases throughout 2024, right? So they talk about basis points and different things like that, and they're going to lower it 75 basis points, right? So now, what is a basis point, right? We don't want to bore you guys with all of those gory details about how all this stuff is calculated, but we want to make sure that you guys understand, right? So they're going to do that 3 different times to lower it 75 basis points. So particularly what that is that's going to be 3/4 of 1%, right? So 0.75, right? So when we're talking about an interest rate of, let's just say, 1%, right? Well, lowering that interest rate 75 basis points, put that at, 0.25 of the interest rate, right? Just puts it at 1/4, right? So, that's what they're talking about when they're talking about basis points. However, what is very important to understand is that when you're talking about mortgage rates and what they're actually lowering, it has a cause and effect relationship. because the way the market interacts, but it's not exactly that they're actually lowering mortgage rates directly. And that's what we want you guys to understand.
Yeah. So, and again, that's again, I just want to make sure that we provide clarity, right? So, I understand when we're talking about the Federal Reserve being able to lower interest rates, what is that particularly lowering for the most part?
Absolutely. So, great question there. So, what they're lowering is the federal fund rate, right? So, the rates that they charge banks to borrow money. That's what they're lowering. So, they're lowering that. So, if the banks are getting charged a certain percentage to let you borrow money to, buy a car, right? Or, credit card debts, different things of that nature, and even for your home loans, right? So, if they're being charged a certain amount, then they're going to charge you a multiple of that number. Okay, so typically that federal fund rate that they're lowering is connected to like the 10-year treasury bond and that sort of thing. It's directly correlated to that. So the fact that mortgage rates went up so high, it actually went up way higher than it should have based on the level that they actually raised rates. So there's more videos that unpack that, and I don't want to go into that, but basically it's like the Federal Reserve was raising rates, and then the mortgage thing said we're going to charge double than what we should, right? So when they were charging 7% on a mortgage, they really could have still charged maybe 5.5%, different things like that, but they were just scared of what the market was going to be doing, so they wanted to make sure they had even more of a cushion in how much money that they were making for each of those loans.
That makes sense. That makes sense. Because essentially, it's that trickle down effect that everyone talks about, right? So essentially, it is just when they're raising rates, they make it a little bit more difficult to borrow money, right? And having that aspect of things are not even more difficult, but more expensive. It becomes very more expensive now that they raise rates, but now that they're lowering rates, the banks are going to hopefully allow people to borrow money at a cheaper rate, which hopefully kind of trickles into the mortgage rates, correct?
Correct. It's definitely going to trickle down to the mortgage rates. And in fact, just the news of them lowering rates in 2024 before they even do anything has already had a trickle down effect, right? Because everything kind of runs with the stock market and different things of that nature. So now they're looking at it like, okay, so there's going to be less rate hikes. There's more confidence in the market, so we could charge lower rates. We could feel more comfortable doing that. So rates have actually already started being lowered, even though the Federal Reserve hasn't actually started making those cuts yet. So if you're looking to purchase a home and you're looking to actually get ahead of that stampede of buyers that are going to be coming in the market, now can be a great time for you to do that.
No, true indeed, true indeed. Almost like the stock market, right? You get some news, it's either going to go up or go down, but the real estate market, the same effects, right? Typically, when we're talking about the Federal Reserve, okay, that makes a lot of sense. So with that being said, I think understanding the aspects, because you just said the stampede of buyers, right? So you're expecting as a real estate professional that there's going to be a market of a lot more buyers that are coming. It's going to be more difficult to purchase a home.
Absolutely, absolutely, because there's been buyers that have been on the fence for the last 2 years because rates were so high and it impacted their affordability. So if I just give you a small example of, let's say in 2021, somebody was looking to purchase a home for $500,000, right? And the rates increased, and now that same home, they can't purchase that anymore because they don't have that buying power. So now they had to look at homes that only cost $350 or even a little bit less than that, right? So it's like, well, no, I don't want to buy that home, right? Because I'm comfortable in the home I'm already in, right? Because typically buyers who are looking to buy at $500,000 plus, they already own a home and they're looking to upgrade, right? Mm-hmm. So that completely halted that market because it's like, I'm living in a home that costs $350 already, that kind of 3-bedroom, 2-bath, 2.5 baths, 2-car garage home, and I wanted a larger home for my expanded family, and I can't upgrade to that anymore because now it went to me needing, let's say, $120,000 in household income to qualify for that purchase, to needing almost 200,000 plus to qualify for that $500,000 home. But with the lower interest rates, buyers at all price points are going to have more opportunity to purchase.
Yeah, so essentially, it's almost coming where if you have if you have a $300,000 home that you're looking to buy, mortgage rate at 5 to 7% is basically going to take you out the running because the mortgage payment is just too high and to be able to affordability, right? And a lot of times I guess loan officer or lender isn't going to take that risk. Exactly. I'm not going to take the risk. So makes sense.
And that's a good point that you said like that, right? Because, anybody who's ever purchased a car, right? You go in there and they sit you down and they don't even talk to you about the price of the car. They're like, well, hey, how much can you afford a month, right? And then they even try to stretch your budget more than that. It's like, well, you go to Starbucks every morning before work, right? So that $5 times 30, well, you can pay extra $50 a month because just cut out that Starbucks, you'll be all right? So I don't recommend thinking about that for a car payment, right, and stretching your budget for that. But when you're thinking about your home purchase, a lot of people are just thinking about, okay, what mortgage payment can I afford, right? So when you add in taxes, interest, insurance, and all those different things within that principal mortgage, let's say somebody that could afford $2,500, again, in 2021, they're able to purchase a $500,000 home. But rates went up. Now they can only buy a home for $350,000. And whether they were renting right now or not, they're looking at it like, well, man, for $2,500 a month, I can rent a better house than I could purchase at that $350,000 price point. And for the short-term thinking, that is absolutely true, right? And that's been true. So that's been the problem currently in the market, and that's not going to be the problem going 2024 and beyond. So again, that stampede of buyers is coming.
And a lot of times it's also, like you said, there was a lot of people on the sideline. A lot of times that would probably be first-time home buyers, right? Yeah. And I do want to preface first-time home buyers, when you get that pre-approval, right, we're really excited. That's the first step of home ownership. It's great. But let me tell you something. You know your budget, right? You know your budget. So with you knowing your budget, don't allow a pre-approval to stretch your budget out of your means, because that pre-approval is exciting and you possibly can't afford it on paper. But I'll tell you right now, you know your budget, you know what you want to spend, and stay within your means. But home ownership is the way to go. So I did want to kind of preface that with the new stampede of first-time home buyers.
Absolutely. No, that's a great point, right? Because if you don't talk to your lender and let them know, okay, this is the budget I want to stay in, give me an approval letter for that, they'll give you the maximum that you qualify for, right? And oftentimes what happens is that when you're purchasing a new home, we're in the beginning of the year, first quarter, guess what? You just got your taxes, right? So you paid off all your credit cards, different things like that. Maybe you don't have an auto loan right now because you paid that off. Well, that's all reflecting on that loan approval, right? But after you buy this house, you might plan on purchasing a car, right? And that wasn't calculated into that. So if you went to that maximum budget and then now you got a $750 car payment, then everything is out of whack.
Everything. Whether if it's, you are expecting a child, right? Those expenses aren't calculated into your ultimate budget. So now if you have the expectation of expecting a child and you're buying a home, your expenses of a child is not considered in that pre-approval. So now you probably can't really afford the home because your bottom line is much different than what you thought it would be. So I definitely always want to preface that, because I hear so many first-time home buyers say it's so expensive to own a home and different things of that nature. But in all actuality, it's about budgeting.
Absolutely, yeah. It's definitely about budgeting and just, getting into 2024 and beyond. We still have low inventory everywhere, right? So when you're thinking about that, don't think you could just continue to wait on the sideline and everything is going to just kind of work your way. I would say one of the advantages of purchasing this year would be with rates going down and lenders, wanting to kind of lick their chops in a sense of actually funding more loans and different things because it's been really scarce the last 2 years because there haven't been a lot of inventory and there hasn't been a lot of buyers because of affordability. Now they're going to kind of even loosen some of those lending standards in a sense, right? Of saying like, okay, well, yeah, now more people can qualify. We might be a little bit more relaxed on certain policies because some lenders have different overlays, right? Where when we're talking about the VA loan, there's not necessarily a minimum credit score, right? And you have a ton of flexibility with debt to income ratio. But because of the market we were in the last 2 years, a lot of lenders with uncertainty, they were putting different requirements on veterans where it's like, well, yeah, I don't have to do that, but for us to fund this loan, we want to see this, this, and this as well. And we're going to see a loosening up of that a little bit to a certain degree, right? So again, you don't want to try to time the market. You want to kind of strike when the iron is hot, but definitely there's going to be a lot of opportunity for our veterans and active duty members this year. So really excited about that.
That's exciting. That's exciting because though home ownership is tough for some, it's going to be one of the most powerful. It's going to be one of the most powerful cornerstones that's going to put you in the best position of a foundation for the most part. There are so many different, nuances to certain circumstances and situations. Gurus saying to buy a home, gurus saying not to buy a home. Ultimately, it can be a changing factor in majority of people's lives.
Absolutely, yeah. No, and that's a great point. That's a great point. That's something I always want to kind of send home for people, right? Because we're in the holiday season, and something that I've kind of been doing, and I want to even do a little bit more on a more formal level is kind of speak to my family more about financial literacy and about purchasing homes and doing different things like that. And, they've seen my growth and development. We've had a lot of conversations this holiday season over affordability, right? I have certain family members that are getting to that retirement age and they've been renting properties all their lives, right? And they're looking at what their amount of Social Security is going to be right when they retire, and maybe a little bit from 401k and different things like that. And they're realizing like, well, wait a minute, I'm not going to be able to afford to live. And they're really kind of panicking over that, right? And what you really must understand is that Social Security money, that pension and different things like that, it was not designed to take care of you and for you to have a mortgage, right? So when we think about that 30-year mortgage, the way it was set up is that you buy a house maybe in your 30s, right? And when you reach that retirement age, that home is paid off. So that big line item in your budget is gone, right? That is no longer there. And if she would have been in that situation, she would be okay financially, right? Because the amount of money she would have if her home was paid off would be totally fine enough to pay utilities, different things like that. But now it's like some tough decisions are going to have to be made, and maybe living with a relative or even one of her children or different things like that, or even getting a job after retirement, right? That's how a lot of people end up working at Walmart and different things, being a greeter and certain things like that. And she was actually kind of alluding to certain jobs that she feel like she might be able to do in her advanced age because she don't want to go live with somebody, right? She's been independent her whole life. But now when you're a younger person right now, you're watching this, understand that marathon, right? Understand the long-term benefits of home ownership. Nobody's trying to sit up here and scam you and just tell you to buy a house because it's going to benefit me. The money that I'm going to make off of you buying a house as your real estate professional and different things like that is very minimal. We're trying to look to set you up for your whole entire future. And that is literally, again, the most expensive thing that you have to purchase. And that's the cornerstone of really building wealth. And as you see on the channel, we actually had a video about a reverse mortgage, right? And we had a reverse mortgage person come over here. So imagine those people that bought a home in their 30s, right? And now it's paid off. And they got that extra $2,500 a month that they could take out in addition to their Social Security income. It opens so many doors, man, Kenneth. So I'm just trying to tell the people, bro. I don't want to be too preachy, but I'm just trying to tell the people.
I understand, man. I understand. But at the end of the day, what it is, it's we're crossing that time, right? Of these baby boomers. A lot of baby boomers are going to be able to not be able to have affordability in their housing situation because they didn't have the knowledge and also the understanding on how to set up long-term factors. A lot of people were living short-term, whether if it's disability benefits, whether if it's real estate benefits, and whether it's entrepreneurship goals. These are all long-term factors that we're putting in place. So having these understandings and positions, it's going to ultimately serve you. It serve you now and obviously later. So with that being said, never let some type of advice that we're giving here think it is something that ultimately we're just abundantly, living off of, or different things like that. No, it's for the people, and we want you guys to understand that we don't want that to be you. Though it is there's information out there. Some of it's true, some of it's not. I'll tell you here on the Prepare to Compete podcast, though, everything will be made in truth. Okay. So, but man, it's incredible. But before we get out of here, man, I did want to ask you, with 2024, our veteran community wants to know 5 major reasons on why to buy a home in 2024.
Oh man, that's great. That's great. So when we're talking about 5 reasons to purchase a home in 2024, one of the main reasons is going to be access to home ownership, as far as being able to find the home that you want with the lowest level of competition, right? Because there's still not going to be as many people in the market if you act fast on purchasing a home. Number 2 reason is going to be with those decreased interest rates, you're going to actually be able to buy more home, right? So that's another reason for you. Also, with so many different transitions, number 3 would be decreased lending standards, right? So a lot of our veterans are business owners like yourself. They actually opened up a lot of different new programs and things where you could actually buy a home if you're 1099 and have a lot more flexibility to do so, right? So you have that. Number 4, I would say, really to be able to secure your future for your family, right? Which is one of the most important things that you absolutely want to do. You want to secure your future for your family. And I would probably say number 5 is to build wealth, right? Purchasing a home is one of the number 1 wealth building tools. So you absolutely want to get in the game to do that. You can access your VA loan more than once. So don't feel like the purchase you make today has to be the last purchase. And also when you're chasing that interest rate, understand again, and we have another video regarding this, and I'll actually put it on the screen. It's very easy to refinance as a veteran with their streamlined refinance program, so that if mortgage rates do drop significantly from what you get, you can take advantage of that as well.
Nice. Man, listen, those 5 reasons for you guys. Again, Mr. Jones is wealth analyst in the real estate industry. He's going to be able to guide you, put you through, from step A to step Z, making sure your success is your success. So, but with that, man, I'm really appreciative of all the information you have provided and also provided the veteran community. But with that being said, we have more to come. We are going to be breaking down, again, regulations, manual references, and different things of that nature within the VA home loan standards and loan guarantees. So I'm really excited about that, man. Just to let the veterans know and kind of debunking those myths, right?
Absolutely. Let's do it, man. Let's continue to build in 2024, man. Continue to get 1% better each day. Prepare to compete. We out. Peace.